This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jens Lapinski of Angel Invest Ventures based in Berlin. Jens, thank you for joining us.
Thanks for having me.
Great. Can you tell us about your background? What did you do before you started investing in early stage companies?
Yeah, so I think for me it all started when I was a child. My father is a huge science fiction buff. He reads a lot of science fiction books. And I sort of got infected by that and went into natural sciences, did a PhD in biotechnology where we built a machine that we then licensed to an engineering company. And from there I went into a startup. I started my own company after that. And after that, I helped start the first startup studio in the UK where we built a product a month, launched it, saw what happened in the market. And then we spun out the well-performing products in the standalone companies. And then after that, my wife and I decided to move back to Germany. I was then approached by Techstars who said, hey, we want to have an office in Germany. Do you want to set this up? Do you want to run this? So I set up Techstars Berlin and was a managing director there for 4 years. And then at the end of 2017, I stepped out and started angel investing full time because I thought that there are not all that many, super highly active angel investors in Europe who write a lot of checks and then coach the founders through and to the next round and help them, raise Series A round from good investors and build big companies.
Great. Sounds like the job of a lifetime to me. But so what excites you right now?
Well, what excites me right now is what always excites me is what I'm looking for is I'm looking for things that I've never seen before that somehow seem to work. I'm looking for people who could do something that nobody else really does. Nobody has thought of it. It's pretty standalone, typically very limited competition. And they've had an insight that's pretty unique. Now, obviously, these kind of things come in waves, if you like. And one thing that has been exciting for me to see over the last year or so has been the rise of collaborative software. I think this is very exciting. But what I mean with this is that, software in the past has been written for, I think of it as it's almost like single player use. You have a user, they do something with the software. And now software is being rethought and re-architected so that teams and groups of people within a company or across departments or even across companies can collaborate very effectively with each other. So I've made 4 investments like this over the last 9 months now. And I'm about to make a 5th. And I think that's a pretty exciting trend.
Well, it's great. Well, you deal with a lot of investors and a lot of startups. What's your advice for people investing in startups? What do you tell them to do before they write that first check?
You mean before an angel investor writes their first angel check into a startup?
That's right.
If it's your first ever angel check that you write, I would assume you're probably not going to, but one of 2 things tends to happen. Either you're extremely lucky and you invest in a hugely successful company, or you lose all your money. I think don't invest money that you can't afford to lose. And I think in general, the way I look at it is I think it took me 10 shots before I started to understand how to actually invest. And this is something where you either work alongside people who've already found the rhythm of investing and you can learn from them. Or you basically prepare yourself for learning it yourself and you build up a significant portfolio of companies. You diversify your risk across these companies so that you give yourself the opportunity to invest in one that, makes you 50 or 100 times your money or something like that. And then the rest of the portfolio and the financial performance takes care of itself.
Well, that's great. And then on the other side of that table, what's your advice for people running startups? What do you tell them to do before they launch that business?
Don't found companies with people you don't know. That's probably the most important piece of advice. I think when I look at teams, my working hypothesis around this is that I think teams always fight in the months, sort of say 6 to 9 after people have come together. And then they have disagreements and they either have a mode of working through the disagreements and they come together as a team or they don't. And this is the breakup risk is quite significant. And I think when you co-found with somebody, you should be aware of this and just ideally make sure that you really have the ability to work very closely with somebody else, and then obviously also do that for many years to come.
That's a good point. The team, and especially the team dynamic, is all important in a startup.
Yeah, it's huge.
So let's talk about the state of investing in startups. How do you see the industry evolving today, and what changes do you see coming up? Of course, we're coming through a transition now from one to the next as far as market cycles, but what do you see coming up?
Yeah, I mean, right now we're obviously in the midst of the COVID crisis, and it's a watershed moment for many reasons. But I mean, so what's happening right now is that, at least in Europe, is that it's obviously significantly more difficult to raise capital because for early stage founders, because many of the angel investors are not investing right now. So there's a significant pullback. And, this is not so good for founders looking to raise. It's beneficial for people who are active in the market, like me. I committed to 5 investments this month, which is about 3 times my normal pace, just because there's so many high quality founding teams out there building startups that I get to see because they find me because I'm active. So for me, I have great fun. I would actually encourage angel investors to try and not be so fearful when everybody else is fearful and you are not, and you invest counter-cyclically. Those are the best times. So I actually think 2020 might well turn out to be a golden year for new investments. It might be a golden vintage year, if you like. So that's sort of one thing. I think the other thing that we're seeing is corporate venture capital. Many of the corporate venture capital firms have pressed the pause button, and I'm quite uncertain. I mean, some have not, but many have. And I'm quite uncertain how many of these pause buttons are going to get unpaused or how long that's going to take. And if you think that's about half of, I think it's about half of the Series A contributions in the US comes from corporate venture capital, right? So it's a significant reduction of the amount of dollars that are going to flow into startups over the next few years. And then it's very practically, I mean, in Europe, most of the VCs are in London. If you're not in London and you can't fly there, which you can't right now, then it's very, very difficult to actually raise capital. So later stage rounds and so forth in Europe, many of them are very, very impractical to close right now. So that's sort of what's happening in the market. And it will return back to normal. We don't know how long it's going to take. It's going to take a quarter, it might take 2. And some of these effects might take many years before they return to current levels. So I think this is sort of what I'm seeing, and my expectation is that it's going to improve, but it's going to take years before we return to a similar fundraising or investment situation as we've had 3 months ago, 6 months ago.
Right. It seems like we're starting a new generation, a new cycle, and it always takes time to get it up and running for sure. But we had a 12-year bull run last cycle, so it's time for a new one. But let's talk about your venture fund there. What is your investment thesis for it, and what startups fit that thesis?
So it started because when I was at Techstars, one of my colleagues sent me a spreadsheet where they had captured angel investors across Europe, and there were thousands of people on that list. But most of them I would characterize as the occasional angel. Oh, I know somebody I like, I'm going to write them a check, which is fine. I think there were about 4,500 people on that list. And, they had counted how many investments they've seen them make over the last 2 years or so. And then they had ranked them by activity count. And what just struck me was the thought that if you write 10 to 20 checks a year in Europe as an angel investor, that puts you in the top 10 most active angel investors right away. And I just thought, this is incredible. I never consciously, although I'd been investing in the industry for 6 years at that point, it never been that clear to me that the number of highly active angels in Europe was actually as small as it is. And I started thinking about why this is. And I thought, this is actually the reason. My conclusion was that the reason why this is that everybody who started off like this, who turned out to have a hand for it, graduated and became a venture capitalist and raised a big fund and started writing seed round checks or Series A or Series B checks and so forth. But the ecosystem in Europe actually hadn't been developed enough 5 years ago, 10 years ago to support highly active angel investors. Or the opportunity always was to basically raise more capital and build a bigger fund. My thesis is quite simple, that the ecosystem is now absolutely developed enough. And now in the development of the ecosystem in Europe at the point where we were in the US, say 10, maybe 15 years ago. And there is now space in the market for people who are angel investors, and they do not stage drift. They don't become seed investors. They don't become Series A investors. They may stay angel investors, and they do that for many, many, many years, build up significant portfolios with significant network effects in them. And if you then coach founders through, help them make fewer mistakes, connect to the right kind of people, and build great companies, then this is probably a very rewarding activity. So that's basically the thesis behind angel investment.
Well, that's great. And so are there particular startups that you look for, and what's your criteria for investing in a startup? For example, do they need to have revenue?
No, they don't. What I'm looking for are people really who, obviously I'm looking for the things that everybody's looking for, right? I'm looking for strong teams and attacking interesting markets and so forth. But I think what I really want to understand is I want to understand what the founders have understood that really other people haven't seen in this way or haven't figured out. So if they haven't got a product that other people are using, basically want to see something where they said, look, everybody thinks about the world like this. We actually see it differently. We see it like this. And we think there is an opportunity to build a really great company if you do it really differently. And we've got some initial proof point that this is probably true. And this doesn't have to be revenue. It can be, interviews with potential customers. It can be letters of intent. It can be initial usage numbers around some consumer product or something like that. So that's sort of, for me, these companies that could actually create new categories. That's really what I'm looking for. And I'm looking for the spark that founders have that has led them to come up with a really different view on the world.
Great. Well, so aside from fundraising, what are the challenges that you see for your startups that they face? I know fundraising is a difficult time and everybody has that challenge, but beyond that, you find it's a regulatory or market or technical challenge that most of your startups are dealing with?
I think all of the founders have to deal with very similar problems. And if they've actually set up their companies right, meaning they have a team that works, they're addressing a large market, they have a customers want what they have, limited competition, scalable model, the thing is fundable. If the basics are there, then the things that founders then have to work through is always the same thing. I think it starts off with what kind of milestones am I trying to hit over the next 3, 6, 9 months? Why are those the right milestones? And how am I going to try and hit them? And how am I going to measure that? Then there's customer development, there is product development, managing your cash. I think many first-time, particularly technical founders, well, actually not so much, let's just say first-time founders, struggle with building high-performing teams. So it's this, how do I recruit people? How do I form teams? How do I generate the right kind of work ethic or spirit in the team? And then, and then the last thing is fundraising. So I think apart from unusual events that some founders experience around, my co-founder is sick, for example, or something like that, or I'm sick, but those 6 things are always the same. So all the questions, all the problem fields are always the same. And the way in which founders successfully work themselves through those problems are very, very similar. The answers are always completely different. Right? So it's like, how do I build this product? I have no idea, but I know how to. But I know how to figure it out, right? So, what does the customer want? Well, how should I know, right? But I can tell you how to do customer development, right? Well, who's going to fund my company? I've got no clue, but I can tell you how to figure it out. So this is always the methodologies of arriving at answers are remarkably similar, but the answers themselves are wildly different.
Very good, great. So you see a lot of applications and sectors out there. If you had to pick 1 or 2 that are really good opportunities for this time, what would you put at the top of the list?
I'm being overrun right now by remote working, video kind of things, to an extent where I'm thinking it's probably not a good idea to invest in one right now. But who knows, right? There are people who've been working on some things for a little while who are building interesting technology. I don't know. We'll see. I've actually become really fascinated. As I said, for me, collaborative software has been a strong theme for the last 9 months. I think that's going to continue. And I've also become really interested recently in the last 6 months in some really physical and chemical science related projects. So that may involve software, but it's really people are saying, look, we figured out a completely new way to build batteries, which is really interesting. Or not even a new way. We figured out a smart way to build better batteries using existing technology. Or we figured out a new way to build medical devices using some very, very smart software. So there are things that are completely detached in their market opportunity from the current just general B2B market, if you like, or the general B2C market. And I think the investments that are benefiting now from the COVID crisis are investments that people made a few years ago. And they are, it's all some remote access, remote monitoring, remote anything. But I think it's probably very, very difficult to start a company now to take advantage of this wave right now, because it will take you 6 months to ramp up by this time this thing is partially over. And all the slots that everybody's now gunning for have already been taken by established companies. So I think I'm not so keen on investing in this quite topical trend, if you know what I mean, right now. So I'm much more looking for things that are either based on trends that I've been seeing for a little while that I think either unaffected or even maybe notionally benefit. And then I'm really interested in, as I said, maybe more science-based technologies that are actually completely uncoupled from this crisis, because you need medical devices, because you need batteries and so on and so forth. So that's sort of what the areas that interest me right now.
Those are good ones. Well, so in the last few minutes that we have here, what else should we cover that we haven't?
I think maybe it's interesting to talk about sort of the increase of, I think the European investment ecosystem, certainly sort of the Berlin, London, Nordics, and many other countries in Europe, that investment ecosystem is starting to grow together into one ecosystem. So people know each other across many countries. There are chat groups where people exchange thoughts and ideas and deals. It's super active. And I see to an extent that this is also starting to form between certain investment groups between Europe and North America, right? So I've made investments in Canadian companies. I've made investments in US companies. And I'm starting to form more and more relationships with American angel investors, American VCs, and so forth. But it's not my primary focus. But when I see interesting companies over there, typically they have some sort of angle towards Europe, because I typically meet them through somebody in Europe. But I find it interesting how through digital, like this interview that we're doing now, the communication technology basically enables us to make all of these investments together across many countries. And I find that really fascinating. And I'll actually like doing that. So I have a very, very geographically diversified investment approach, which puzzles many people, because they assume, you're based in Berlin, you must know all the deals in Berlin. And why don't you just only invest in Berlin? And I say, well, if I see a great deal somewhere else, if I see an amazing founding team somewhere else and we build some really interesting technology, why should I not invest in that, right? So I find that's sort of an interesting macro trend that I think is going to intensify over the next few years.
Very good. So how best for listeners to get back in touch with you?
On LinkedIn, connect with me. If you're founders looking to fundraise, I read all PDFs that are emailed to me, and I respond very, very quickly. And either I say I'm not interested, or we'll have a 1-hour video call, and then we take it from there.
Great. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you. Thanks, Mark.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.